This video is around the accounts receivable subsystem and controls around that accounts receivable subsystem. On slide 8, we have the objectives of the accounts receivable subsystem or all subsystems. First, you need to know accounts receivable. They are people that owe the business money because we've been sent them an invoice. The objectives of all subsystems have the word same next to them, and they stand for safeguard of assets, making sure we don't lose any assets and they're kept at the best possible condition, in this case accounts receivable. Secondly, we're trying to achieve accuracy of accounting information. You can't make decisions unless we have good, correct information. The third objective of any subsystem is having management effectiveness. So we're putting policies in place, and that's actually what's happening. And the last one is efficiency of operations. We don't want to do things twice or more than we have to, keeping productivity high. We'll go through those and how they work in accounts receivable shortly. The next thing we're going to quickly flick on is controls in the accounts receivable subsystem. This is the same for any subsystem. The same as our controls. So we make sure that our subsystem is working properly by what we call separation of duties. The three duties that we separate normally are the recording, the operating, and the custodial. The recording accounts. Custodial is the people who look after the asset, and the operating, the people who run the system. Second way to make sure that we've got a control in our subsystem is authorization. Normally that is signatures or PIN numbers. That stops people being able to access areas they shouldn't be able to access. The third control, and you'll see it in our system, is number multi-copy documents. And you'll see in the subsystem when we come up to that shortly that there's more than one copy of the invoice, the order form, the packing slip. And the last one is employee capability. So if our employees say yes, they know what they're doing, or they're not trained enough to do it, then the system will fall down. So this leads to the main work today, which is this here. This is the ideal system for the accounts receivable subsystem. And what you're going to do is you're going to write in what happens in the order. So the first thing that happens, we'll write number 1, is the customer sends a copy of an order form or whoever that salesperson is. So the shop assistant, they only receive one copy of that. It may be within an email, but what we expect there's an order number on that. So we can go back to the customer and quote that number. Also, we expect that order is an official one from the customer so that it's got their name on it. So we can verify that it's actually from their organization, not somebody ordering goods for private use. So this, the order form is sent to the office manager for a credit check. And it's very important in this that you understand what a credit check is. If somebody already owes the organisations hundreds of thousands of dollars and haven't paid lately, it's unlikely we'll give them credit. If they don't have a proper identification, we're not going to give them credit. If they're not going to have security, that means if we can't get anything back if they can't pay, then we may not offer them credit as well. So they'll perform that credit check and then they'll authorise. Remember we talked about that just before? So they'll sign it or use their password to approve it. Once that credit check's done, that order form is sent to accounts. So you can type that in as well. That's the end of the first step. Second step is that the shop assistant, having noticed that the order form is signed and approved, then can process with that order. So the shop assistant writes out 3 copies of the invoice. Now you may have seen that in the past. The top copy is the white copy, second copy, yellow copy, the bottom copy is the pink copy. Pink or yellow could be around the other way too. So the top copy is sent to the customer so they know how much they owe. The second copy is sent to the accounts department, and the third copy is filed in numerical order. So you can imagine an order book here, and the order goes number 1, number 2, number 3, number 4. The reason why it's filed in numerical order, mainly because it'll stay in the book that it's written in, but secondly, we want to know if any are missing. So if, for example, the invoices are number 1, 2, 3, 4, 5, 7, then we want to know what happened to number 6. So that's why the numerical order is part of our controls, so we can see if there are any missing. We don't want any to be missing. Right, so that invoice has gone into 3 places. The third step is that the store will send goods to the customer, and you can see that wheelbarrow is like the goods with 2 copies of the packing slip. And again, that third copy is filed numerically, so we can see if any are missing. Customer will pick the goods and sign the packing slip. So they'll be checking firstly that they've got the right goods and that it's in good order. Second copy is sent to accounts. So that's the copy that's signed. So that way accounts know that they've received the goods and it's in good order, and that will enable the statement to be drawn. So the customer's happy, they've got their goods, and they've got an invoice to say they have to pay for it. And we're up to the step 4. The step 4 is the accounts will match. So they're going to match 3 things here. They're going to match the order, what the customer's asked for, the invoice, what we've billed them for, and the packing slip that has been delivered. Then they'll write out a statement. A statement for a customer, they may have more than one purchase. So if they've got more than one purchase in a month, it might be 4 or 5 purchases. All of those purchases will have an order form, an invoice, and a packing slip. And on the statement, it records all the transactions for the month. The top copy sent to the customer, and normally that's the one they pay on. And the second copy, in this case, it's filed alphabetically. That way, if the customer has any complaints or queries, it's easy to find for accounts. And so they'll just look up the customer under their alphabetical name. And we make sure we update 2 things. We're going to update the account receivable ledger. Better spell alphabetically correct. And the accounts receivable ledger is how much each customer owes them at any point. In that ledger, it'll have the invoices gone out, but it'll also have in there any payments that they've made. And we'll look at that in our next session. There are 2 ledgers. One is the control ledger, but more importantly, the ledger or the account for that specific customer. So now we've gone through that, we'll just have a look briefly at the controls. Firstly, the first control that we talked about was separation of duties. And so we've separated the person who's making the sale, the shop assistant here. One of the reasons why the shop assistant is important to be separated is because they will probably make some money or maybe a commission on the sale. So we don't want them making a credit check. If they make the credit check and the sale, they'll just grant credit to everybody. So that's why the office manager, somebody in management, has that credit to be done. So the first thing we've got separation of duties. Those that look after the asset, that's the inventory. Those that make the sale, the operating, and those that do the recording, and that's the accounts. So because there are 4 different departments here, it means that there's less chance of fraud and error. Second thing we talked about was authorization, the S and the A. The authorization, we can see here that we've got a signature here, that credit check. Nothing can happen until that credit check has been done. That way we only get customers that we think are reliable in paying us. You'll also see that there's a check down here. So the customer will sign to say the goods are in good quality and have been delivered. And also we'll get a check in here where the accounts are what is ordered is what's been billed for, what's been sent. So a good check in there as well. So that's the authorization part. The numbered multi-copy document, you can see that we've got 3 copies of the invoice, 3 copies of the packing slip, and because they're numbered, we can see if any have gone missing. And we also have 2 copies there of the statement. And the last one, employee capability. Well, if the shop assistant decides just to grant it without going through this credit check, then they're not following through their duty. So they're not capable, they haven't been trained properly. If the office manager doesn't understand what a credit check is, then we still may go through the process, but it may not be effective. So that employee capability is important. So I hope you've got that typed up. Make sure you've got a heading there. And we'll call that accounts receivable subsystem. And what you're to do when you're looking at any case studies that'll come a bit later is see if there's anything missing from what should happen and what does happen. And if there are anything missing, it'll tell you there is perhaps an opportunity for fraud or error or an opportunity for things to go wrong. And so that's why we have a look at the model answer. When this is computerized, a lot of the stuff here will be done through passwords rather than physical documents. And the computer will allow access to certain things. For example, the store won't be able to have access to the invoice, and the shop assistant won't have access to the packing slip. So those access separate those duties for us. Not necessarily 3 physical copies, but it does give us some access to stop people going into places they shouldn't. The next video we're going to have a look at is the journal entries and this accounts receivable ledger. So hopefully you got a little bit out of today. And we'll look at the accounts receivable ledger in the next one. Thanks very much.